What's going on, investors? My name's Emmanuel and welcome to my channel. Guys, the airline stocks have been going crazy over the past few days. Boeing is up 160% off its March lows. You've got Delta up 115%, American Airlines is up 151%, Southwest is up 80%, and United Airlines is up 179% off its March lows. Guys, it's insane. The analysts, economists, health experts all got this wrong. They all missed the mark in terms of the recovery timeline. The initial fears, the initial panic seems to be easing, guys. And the reality is, lockdowns are being eased all across the globe. We are seeing multiple statistics surfacing that suggest that people are flying again. The number of deaths as a result from the sickness has rapidly been declining, but still you have analysts predicting that there might be another second wave. You know, the market is very optimistic. There could be future lockdowns, etc. My question is, if you were so off the mark the first time, what makes you right this time? And look, guys, the reality is I can't predict the future. I don't know what will happen in a month's time, 2 months' time. I'm just looking at the facts. And despite the fear mongering from analysts and other investors, the fact remains people are flying again, period. So for this video, guys, I'm going to look at the business. Not at what the analysts are saying or the economists are saying and what they predict might happen. I'm just going to look at the business. We will compare the four major airlines: Delta, Southwest, American, United. We're going to look at all of the four major US airlines, and by the end of this video, guys, we will be able to determine which one has the strongest balance sheet, how over leveraged these companies could be, and which one is least likely to go bankrupt, and which one of these stocks have I started to build my position in. Here's a quote from Peter Lynch. He says, "Things are almost never clear on Wall Street, and when they are, then it's too late to profit from them." And with all that said, investors, let's move on to the analysis.
Okay, investors, so I would like to kick off our analysis with a quote from Peter Lynch. If you haven't realized by now, I'm a massive Peter Lynch fan, love his book, One Up on Wall Street. I love his results in the market as well. But he said that far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in the corrections themselves. And I think that's quite telling. We're not trying to guess the market or guess when there'll be a correction or a recession. We're just taking action based on the hard, cold facts. All right, so let's move on with that said. So the key points from this analysis will be we're going to be pretty much putting aside the earnings. All right, earnings will be a write-off for 2020 for majority of the airlines, and that's pretty much due to the break-even load factors, which I will cover in the next slide. Okay, it will really put it into perspective for you. The next point, we will be focusing heavily on the balance sheet. We want to be able to determine how strong the balance sheets are for each of these four airline companies, and that will help us make a much better decision on which one to invest in. Next, we'll be looking at the total debt relative to the amount of cash, which will help us determine how over leveraged these companies are, because that's quite important if you want to be able to gauge which company would need a bailout or could potentially go bankrupt. Also, we'll be looking at their operating margins. Typically, airline operating margins are quite tight, but obviously with the lockdown and with the reduced amount of people traveling, their operating margins will be affected heavily. So operating margins will give us an indication of how the management have been handling the revenue versus the earnings. We'll be looking at the cash flow statements again, looking at that free cash flow. It's quite important. And lastly, I'll be revealing my pick and how I plan to execute my position on one of these airline stocks. Okay, guys, and taking a look at the break-even load factor, and this pretty much gives us an indication of how occupied an aeroplane has to be before it hits that break-even mark. So as you can see here, Southwest has to have a 72.5% occupancy to break even. Delta has to have a 74.2% occupancy to break even. United Airlines has to have a 75.6% occupancy to break even, and American Airlines is sitting at the highest at 78.9% break even. So Just to put that even into further perspective, guys, if you take a look here, so even at a 50% occupancy, American Airlines is losing $12,000. Delta Airlines at 25% occupancy, sitting at minus $21,000. That's incredible, guys. And even at 70%, Southwest Airlines is still making a loss of $782. And you've got United Airlines at 100% occupancy of the plane. It makes a profit of 9,500. So just based on the break-even load factor, guys, Southwest has the lowest at 72.5% and is more likely to make some profit in comparison to the others. So I'm going to have to give this to Southwest Airlines. Okay, guys, so I have listed Southwest. We've got Delta, we've got United, and we've got American Airlines, okay? And we're going to put them side by side as I've done. We've got their market price and we've got all their financial information a bit lower. Let's start off with their share price. You've got Southwest currently trading at $37. Delta is at $33. We've got United, the most expensive, which is sitting at $44 a share. And American Airlines is the cheapest at $18.20. Okay, so all of them are all off their 52-week high. As you can see, Southwest, the 52-week high was $58. Delta was $63. United was $96 at its 52-week high. American Airlines is $34. And with the crash that happened in March, they're all way off the lows. Southwest was at $22. Delta was at $17.51. United, its lows was at $17.80. Massive fall. And American Airlines was at $8.25. So pretty much, guys, from their 52-week high, Southwest is currently down 35%. Delta's down 46.57% off its 52-week high. United Airlines is down 54.46%. And American Airlines is down 50% off its 52-week high. So judging by this, you can see the impact that they had in March as a result of the lockdown. They're all trading way below their 52-week high. That's an indicator for us in terms of the recovery. If they do return to their 52-week high, it's looking like, that United still has a way to go. So there might be a lot more profit in United Airlines, and then American Airlines next, and then Delta, and then Southwest. But I've included the book value per share here, guys. And pretty much the book value is the total shareholder equity divided by the total shares outstanding. And what that really means is the general consensus for the book value per share is that a stock is considered undervalued if the share price is trading lower than the book value per share. Okay, that's the general consensus. Another theory is that the closer the stock price is to the book value per share, the more undervalued the stock is. Okay, so taking a look at the book value per share on each of these airlines, you've got Southwest, which is at 17.84, Delta is at 22.52, United is at 38.09, and American Airlines is actually minus 6.23. So as you can see, guys, they're pretty much all trading above their book value per share. The closest is United Airlines, because its share price is $44 and the book value is 38.09. But again, guys, that's just, I don't base my investing decision based on the book value per share, but it's always good to just take a look at. Okay, guys, and now moving on to their balance sheet. But I've also included the operating margins because, again, like I mentioned earlier, it's a management indicator for me. Southwest is operating at a 10.85% operating margin. Delta has the highest operating margin at 11.75%. United is at 7.64%. Oh, two percentages there. The worst performing one is American Airlines. And operating margin, guys, like I've said before, it pretty much is an indicator as to how much of the revenue is kept as earnings. So if you look at the operating margin as $100, the $100 is the revenue. Southwest Airlines has kept 10.85. $10.85 of that as earnings over the revenue. Delta's at 11.75. So in terms of operating margins, Delta is a win on this. Okay, guys, and moving on to the total current assets, you have Southwest at 7 billion. Delta is at 10 billion. United is at 7.9 billion. And American Airlines is at 7.1 billion. So all fairly within good range of each other. Delta obviously has the highest in total current assets. And looking at the total current liabilities, you can see Southwest is sitting at 10.2 billion. Delta has total current assets of 19.3 billion. United has 16 billion, and American Airlines has 19.2 billion. So that provides a current ratio of 0.69 for Southwest, 0.53 for Delta, 0.49 for United, and 0.37 for American Airlines. So in terms of the current ratio, the closer it is to 1, the better, because that pretty much indicates that Southwest, or any stock essentially, has enough assets to cover their financial liabilities within the next 12 months. So in terms of that, Southwest has the best current ratio out of the three. So that's a win for Southwest. Moving on to their total assets, and as you can see here, Southwest has 26.8 billion. Delta is sitting at 68.7 billion. United is at 53 billion. And American Airlines is at 58.5 billion. So in terms of total assets, Southwest has the least amount of assets, but with that, they also have the least amount of liabilities. I mean, taking a look at Delta sitting at 54 billion in total assets, United Airlines at 43 billion, and American Airlines is sitting at a whopping 61 billion. And looking at the total cash position, guys, you've got Southwest that has 5.5 billion in total cash. Delta sitting at 5.9 billion in cash. United Airlines is sitting at 5.2 billion in cash. And American Airlines is sitting at 3.5 billion in total cash. Now, this is quite important, guys, when we're looking at the long-term debt, because Peter Lynch always emphasizes the company needs to have more cash than long-term debts. This is quite an important point, guys, looking at the total cash versus the total long-term debt, because that will determine which company is over-leveraged in their position. And if you can see here, Southwest have total long-term debt of 2.2 billion. So they've got enough cash to facilitate their long-term debt. Whereas when you look at the others, they're really all over-leveraged. 5.9 billion to 12 billion, 5.2 billion to 13 billion, and 3.5 billion to 21 billion by American Airlines. So they are way over leveraged in terms of their cash versus long-term debt. So in terms of that, I'm going to go with Southwest for this. Okay, guys, so considering all these factors put together, I would say Southwest has the strongest balance sheet, and it's predominantly based on its total cash versus long-term debt. Guys, I mean, if they do run into trouble, the only company really that has enough cash to take care of their long-term debt is Southwest. And again, they do have the highest current ratio. So within the next 12 months, they are able to liquidate their assets, be close enough to cover their current liabilities. And with the excess cash as well, that would go in handy as well. So I would say Southwest has the strongest balance sheet of the four. Okay, guys, and moving on to their cash flow statement. You've got Southwest as 2.5 billion in net cash from operations. Delta as well sitting quite healthy at 6.8 billion. United Airlines 5 billion, and American Airlines is at 1 billion. So as we can see, guys, American Airlines has really been underperforming. You know, it really was a put off for me with the amount of cash versus their long-term debt. But we'll still keep it in there for comparisons. And we're moving on to the investments. So this is the amount of money that the company is reinvested into property, plant, and equipment. And as you can see here, Southwest have invested 1 billion. Delta has been quite busy at 4.5 billion reinvestment into plants and property. United Airlines have reinvested 4.8 billion. And American Airlines have reinvested 3.8 billion. Okay. Now moving on to the acquisitions and net, and this pretty much is an indication of how much the company has spent investing in other businesses. So as you can see here, Southwest haven't really been doing that. Delta have been busy investing in other companies. I mean, they've spent pretty much almost half of what they spent in their own business at 2.2 billion in other acquisitions. And United and American, there's no information regarding that. So in terms of purchases of investments, again, back into the company, Southwest Airlines spent 2.9 billion, Delta 0, United Airlines is sitting at 2.7 billion, and American Airlines is sitting at 3.4 billion. Okay, so the net cash used for investments, it's pretty much Delta have been really busy in terms of that. Southwest have been quite preserved with their investments, sitting at 472 million, and United Airlines have spent 4.5 billion on net cash investments, and American Airlines at 1.9 billion in investments. Okay, now in terms of common stock repurchases, this has also had bad rep recently, because there's been a lot of criticism of the airline companies. A lot of the criticism on these airline stocks is that they've been using the money to reinvest into stock repurchases, which artificially boosts the value of the share. A lot of people consider this as an irresponsible move. The only company that warrants repurchasing, really, in my opinion, based on the cash versus long-term debt, is Southwest Airlines. The rest really should not be repurchasing any shares back to artificially boost the price, but they all have been busy. Southwest has invested 1.9 billion in stock repurchases. Delta Airlines spent 1 billion in stock repurchases. United is at 1.4 billion, and American Airlines have only repurchased 660 million shares. And they're all sitting in positive free cash apart from, yet again, American Airlines. But in terms of the free cash available, Delta is sitting quite strong, followed by Southwest Airlines at 1.4 billion, and United just scraping by 190 million. And to summarize the cash flow, guys, I think again Southwest Airlines pretty much beats out the competition. It has a nice healthy free cash flow of 1.4 billion. Even though Delta does have a higher cash flow position, I don't think it should be investing in other acquisitions during this lockdown. I think it's a bit irresponsible of the management, in my opinion. And then American Airlines is really in big trouble. Okay, guys, so that's my roundup there. Okay, guys, and just a quick reminder, you can find all of these US major airline stocks on Trading 212. All you have to do is just go to the search menu, type in like Delta, that will come up, or you could even just put in the ticker symbol. So American Airlines is AAL, which is American Airlines. Southwest is LUV, you get Southwest Airline. And then United, you can just type in like United Airlines. There you go. And also don't forget, guys, once you click on it, there is fractional shares available on Trading 212, which I think is amazing. All you have to do, rather than enter the number of shares, if you go down to the amount you want to invest, and let's say you want to invest £10 in United Airlines, you could put the value £10 and you'll be able to buy 0.284 shares of United Airlines. And also, guys, if you do want a free stock with Trading 212, there is a link below in the description. If you click the link and sign up, you get a free share and I get a free share as well, guys. So just a quick information for you.
Okay, investors, I hope you gained a lot of information from my analysis, and if you did, please hit the like button. I started building my position in Southwest Airline this week, especially after I had completed the analysis, and I am happy with my current position. And if the market price does drop, best believe I'll be buying up more shares at a cheaper price, and I'll consistently build on my position that way over time. So whichever airline you decide to invest in, make sure you don't pour all your money into it all at once. Be an intelligent investor. And with that said, guys, if you want to see more content, please consider subscribing. Please hit the like button as it really helps my channel grow. I love you guys, and I'll see you in the next one. Peace.